Magazine publisher and entrepreneur Judith Mancini is sharing captivating conversations with experts in their field about the latest trend in our ever-changing world to help you become healthy, wealthy, and wise. Judith Mancini Today will spark your interest and inspire you to lead your best life ever. And now, here's Judith.
Judiths Today is sponsored by Basic Brands, Inc., providing the highest quality specialty products in the natural food industry. Visit basicbrandsinc.com and enter JMT15 for your 15% discount on your first order, including their best-selling Vitamin E ointment, which helps restore moisture and elasticity to your skin. Good morning, everybody. Welcome to Judith Mancini Today. We're happy to have you here, and I have a very special guest. I'm just going to read a little bit about her to you. It's Martha Laff, L-A-F-F, and she prefers to be called Marty. So welcome, Marty. Let me just read this about you. Marty is a registered financial representative and founder of Laff Financial. Her vision is for clients to have successful, ongoing results according to their goals and dreams. She is committed to quality investment philosophy and emphasizes matching goals, risks, rewards, and diversifications. Relationships are key to her, and consistent contact is paramount to strong relationships. Welcome, Marty.
Thank you. How are you doing today, Judith?
I'm doing well, thank you. And you?
Excited and really good.
Good. Well, let's start out by explaining the designations of all these letters behind your name, because we're not quite sure exactly what they mean, but I know you spent a lot of time educating yourself on them before you got them.
Yeah, yes. So I actually, in the 1980s, early 1990s, got my first degree, which was the one that says CLU. It's alphabet soup out here, but so CLU is Chartered Life Underwriter. I got it through the Bryn Mawr College in Bryn Mawr, Massachusetts. Then the other degrees, I take about 10 years and then add on another degree. So the second one was the CHFC, which is Chartered Financial Consultant. And that one I got through the Denver College of Financial Planning. And then the final one, I went back to the American College and got the CRPC, which is a Certified Retirement Planning Specialist.
My goodness, that's a lot of studying, and I'm very impressed with your credentials. Bryn Mawr, isn't that one of the Seven Sisters?
I think so.
Yes, I think so too.
Yeah, it did take a long time. I worked at it very hard, and I actually have some other smaller degrees that I did. And I've also taught classes on these types of products or types of issues.
That's fabulous. That sort of makes you a full service financial planner. It's excellent. Well, let us just start out by mentioning the fact that right now our country is in the grasp of really high inflation. Do you have anything to say about that? And if you prefer or you're limited to what you can say, that's fine. But can we explain at least what inflation is to some of our listeners who don't understand what's going on?
Well, it kind of starts with the idea of what the federal banking institutions are doing. They start raising the interest rates. We've had a difficult supply chain. So if anybody remembers going in their basic financial classes back when, supply and demand starts that issue. We've had a tremendous amount of supply issues because of the pandemic. And so that started to raise prices. And because prices went up, we're now seeing that employees are asking for higher wages, which will send more difficulties, and we'll have probably some more inflation. The thing to remember, though, is it's not a permanent situation. I always check history in the morning when I get up. I spend about an hour and a half checking the various financial channels and reading certain programs so that I can kind of stay up with what's going on in the Ukraine, what's going on in the United States, and internationally, globally as well.
Well, it's a pretty sad situation for all of us. Is this the time to invest or to just protect your assets? Well, I know you
Well,
can't.
that's not an easy answer.
Right. Okay.
So I can say that I believe it is a good time to invest, but what some people need to do is check to make sure where their targets are and what they can afford. Starting to invest when you don't have a real budget or a balanced income, it may not be. I think it's actually an exciting time. The last time I had a situation with this was in 2007 when we were going into the mortgage crash, which happened in 2008. I had several retirement plans that came over to me, 401k rollovers, and I invested because everybody was in a panic. And when everybody's getting out of the market, it's a quote from Warren Buffett, it's time to buy. So, but we just have to be careful, be really careful with what we're putting the money into.
Absolutely. So let me ask you, when you are advising people, you have these degrees in different areas, and I think it's imperative that single women, divorced women, and widowed women take control of their money. Whether they're married or not, they need to be looking at the investments and all. And it seems like you sort of specialize in that area for women.
Yes. Actually, I also am a part of several organizations which are to help women and children in need. And as far as another organization, I work with a program called Divorce Transition Professionals. And in that, I network with people that can help supplement what I'm doing with good advice as far as accounting and legal work, if they need an investigator. So it's, for me, I can help guide
investigator for a divorce. You mean an investigator for a divorce, like a forensic accountant, something like that? Is that what you mean?
Yeah. I also do, I have done over the past years financial literacy programs. So, and I'm getting ready to put one of those together. So if someone would like to know about investing 101, I've also been asked to be a part of an educational program. It'll be in June with an organization that helps young girls or young people that are coming out of the foster system and need to get started and know what they're doing. So we want to give them a foundation.
That's excellent. That's excellent. We would love to hear more about that. Will that be put up on your website, the information for those two things?
Yes, we're gonna. I mean, actually, I had some updates done this week on my website. It's always evolving so that we can make sure we've got the latest information.
Would you just mention that, because this is the kind of show I like to do, to educate people, but then they need the resources later, so that if they're not taking notes or they happen to be using our app on their cell phone and they're out walking. So just mention your website, what it is, and we'll do that again also.
Okay, so the website is really easy. My last name is Laff. The easy way to spell that word, it's Laff, as in Frank. So it's laughfinancial.com. And there are 3 F's in there when the laugh part connects with the financial part. And when you go in there, there's one spot in particular, there's a tab at the top of the page, and it says Risk Analysis Questionnaire.
I was just going to ask you about that, because I think that's an excellent part of your website. People should definitely look at it.
Yeah, and if they click into it, it's a short, like less than 5-minute program that they can go through, and they will get the report back to them. And I will also get a notice that they've gone in for it, but I will not bother them unless they want to hear more about what I'm doing. I always want to respect people's privacy.
Wonderful. Okay. Now, what do you think is the biggest mistake or the most often asked question when people come to you for the first time?
Quite frequently, they don't have enough information. They've gone through high school and maybe college. They make these mistakes because they've taken those classes, and what they really need sometimes is not to just jump in on an internet program. It's a big mistake if you use only that. It's the right thing to do at times, but once you get to a certain point where it's not enough and you need to know more about what you're doing, they need to move in, and a lot of individuals will just keep on pushing through. I have a really cute story about this, Judith. One of my
Good.
clients, when I first started in the business and I was opening up a retirement plan for him, this happens to be almost April 15th, and people, if they still put in money into a retirement plan, can get a benefit deduction for last year. So this fellow I was working with, he came to me and I started getting his financial information. I always take a little bit of an information sheet. He said, oh, I've got this bank, and I have something over here that my mom and dad told me to put money away. When I looked at the programs, all three of those different accounts were the same products, but just at different locations. So that's really where I find that was the first mistake that I really want people to. You don't diversify by having different locations that you're placing your money. You diversify by finding products that fit. And I actually have a program where I can put somebody's already existing investments in and get a report back of what's overlapping.
That's cute. That's instead of diversification, that's called scattered.
Yes.
That's pretty funny. Okay, so I think what for the people out there listening to us, I think you're talking about different sites. If you're brand new and maybe in high school and want to check it out, you're a senior and getting ready to go to college, or you're in college or graduating. You're talking about day trading places like TD Ameritrade and Robinhood and different things like that.
Yeah, I started to get into that in the last question. What I'm finding is, as a ground floor situation when someone wants to figure it out, if they go on one of those, it's okay. But it's not my recommendation overall. Those types of products I have seen over the last couple of years because of the pandemic, again, people opening accounts and trading. And I do a different kind of advising. When people are getting in and out and waiting for the next high stock, and they're going by these maybe TV people that or they just see it online.
Sure.
No one is giving them the real opportunity to make a difference in their budget. I have a same example, just even with my own grandson. He took money out of his investment account with me, and I gave him stocks I gave all five of my grandchildren a portfolio of a few stocks in a lot of different interesting areas: Disney, McDonald's, Nike. And so he wanted to try the Robinhood program, and he took money out. He has lost every penny he put in that because he put the money in, he took it out. He thought he was going to get it at the high, and he got it actually at the low. I'm sorry, the reverse. He thought he was going to get it at the low, and then have it increase. And when it started to go back down again, he sold. So then there's a tax consequence. There's what's called short-term investment taxes, and then there's long-term investment taxes. So what he had to pay in taxes at the end of the year last year really said, he came back to me and he said, "Grandma, thank you for all your help over the years."
Well, that's a hard lesson to learn that way.
Mm-hmm.
Yes.
One of the best examples of multiple places. I think I may have already touched on that. But you want to figure out what's best for you. And I think one of the things that I like to share too is if you've gotten to a certain point, and I actually compare my portfolio sometimes and the portfolio clients to being professionals in what they do. And most professionals, even tennis players, golf players, football players, they have coaches, even though they're the best in their area, because that keeps them on target. So in the financial situation, staying on target, having somebody on your side that's helping you and coaching you. I have clients that have done really well over the last 25 years. And they've called me over even this year about, I'm so worried about my portfolio, what's going on. And when I share with them that we're doing okay, they're very excited about that.
I'm sure. There's a lot of uncertainty out there right now, and I actually think it's imperative to have a financial coach or planner helping you do these things, because
Yes.
there's just no way, if you have another profession, you can take the time to investigate everything. And there's so many things in the stock market that are not covered. I mean, buying shorts and calls and things like that. You're not going to get the benefit that are the day trader. So what you do also as a financial planner is you bring in other people. You don't actually do the trading, do you?
Oh, I actually do.
Oh,
I'm
you
a
do?
licensed licensed investment advisor. I have a Series 7 license, so I
Oh,
can
good. I
do
didn't
purchases
realize
in
that.
bonds and all those. And I've taken the specialty in alternative investment licensing also.
So what is alternative, like cryptocurrency?
Crypto, there's some things that are in commodities, and I can help
Okay.
people with that. So I had to get that permission to do those because it was another class.
Okay, so commodities is something that people are probably looking at quite a bit right now, because having learned that Ukraine is one of the, if not the top supplier of wheat to the world. So
Right.
wheat would be a commodity. Can you speak a little bit to what a commodity is for others out there?
Well, there's a number of natural products like grain, corn, metals, precious metals. Those are all things that are traded as a commodity. And then there's also, if you don't want to get just into a single commodity, my father-in-law got into a commodity years ago, and he actually had a call from someone in the Fed saying, "Are you trying to corner the market?" Because he didn't know what he was doing. And he actually put in an order that would have taken on 1 million shares of commodities, but he didn't know he was doing it on his own. And it's one of those unfortunate things. So it's, again, best to sit down
Yes.
and hear a little bit more about that. But it can be, like I said, corn, precious metals, other types of things that are available, cattle, livestock, that sort of thing.
Yes. Okay. So you bring on other people to help with you. Do they help coach the other person? What are your other advisors that are on your website? What do they do actually?
Good question. Most of them are licensed the same way I am, and they are, well, as far as like Steve is on my website, he's the head of this group, and we're what you call an RIA, Registered Investment Agency, which gives us a little bit more leeway in what we can do. Steve heads that group, and I'm a partner with them. So all of those individuals that are there have assistants. I usually am in a monthly investment committee meeting with all of them, and we discuss what's going on, what needs to be changed. And when there's an emergency, if something changes, my partners and I will discuss it. We're doing most of this by Zoom or on video. And so, because I'm like an hour drive from his office. But if I need a backup, if I want to take a vacation, if I'm sick, I use them as my backup. They're there to help in all ways.
Well, I think the worst thing you have to deal with now, everybody bear in mind, we live in California. So the traffic in Southern California can be just as bad as a natural disaster. It is a natural disaster. So, okay, so now what do you tell somebody who is at retirement age and they never invested any money at the age, let's say they're 60 to 65, they're getting close to retirement. I guess 67 is the actual retirement age for the feds these days. What do you tell them? What should they do if they're living on a fixed income and they've never taken care of themselves?
Well, that can be a real challenge, and it's an important part of actually instructing people. And there's the Social Security part of what they can achieve, which is at 67. And then unfortunately, someone that hasn't got enough funds to match their budget, they're going to need to find some kind of a part-time job and there's an awful lot of people that are starting small businesses because that will supplement their income. There was the great resignation over the last year or two of people leaving businesses because of the pandemic. So it's not just young people, it's people all over that are opening little businesses and staying working.
I think a lot of people depended on these payments from the government and thought, wow, I'm doing pretty well now that I don't have a job. Maybe I can hang out, but they don't know what they want to do. They don't know about a small business. And that's where I think even life coaches can help you, because maybe what you've been doing, maybe you're an expert knitting person and you can make an income. So if they made the income to make up the lapse in their budget, what would you say would be, I'm not asking you to delve into everything, but should they be investing in the stock market or just put it in like mutual funds? And can you explain the difference between a mutual fund, a REIT, a real estate investment fund, or a mutual fund that specializes in one thing? What can we help you?
I can kind of give an introduction to that, but I have to be really careful because of compliance that I'm not telling people to buy specific things. I'm being very cautious.
No. We don't want to suggest, and you should check with your own personal accountant or specialist in this field. We are not making any recommendations on this show. We're just trying to educate you on what is out there to talk about and look at.
Right. Okay. So I usually do a class on this, and one of the first things I teach is about the Dow, which is the stock market, and that was started back in the 1880s. And then mutual funds came along in about the 40s. They started bundling stocks. So what you have is when you're on the stock market, you're buying an individual stock or a bundle of, say, Microsoft or something that you're interested in. When you buy like 100 shares, that's only that stock. So you've got the risk of that stock only. Mutual funds came along in order to help people get more of those kinds of stocks bundled together. So a mutual fund, quite frequently, depending on their style, will have 40 to 250 and more of individual stocks bundled into one ball. So when you buy $1,000 of a mutual fund, you're getting 40 stocks out of it, or 50 stocks, or whatever that particular product is. And I kind of analyze that or share it in my classes, that it's like the difference between buying all the individual ingredients to bake a cake. But if you really want to have a great cake, you might want to go to the store and get a Betty Crocker box. It's got everything in there except the water. So a mutual fund is more like the Betty Crocker. The stocks are like the individual ingredients that go into a cake.
Great comparison. I love that.
And I actually am licensed to offer bonds and mutual funds that invest in stocks. So it's like a variety of opportunities.
That's fabulous. Let's talk about what bonds are, because there's corporate bonds, there's government bonds. Let's speak to that for just a minute.
Sure. Bonds, the difference between a stock and a bond. A stock, you own that company, a piece of that company. With a bond, you're owning the opportunity, you're loaning them money. So one is own, the other is loan. And you loan your money to a government, to a municipality, or to even a stock company. So you're loaning money. They promise to pay back that amount of money in a certain period of time. And the bonds also can be municipal, which if they're within the state of California, the income that you get from that is not taxable. So that's a really good thing, is to go into government types of bonds and make sure that you've got the ones that are within your state. Because if you live in California and you buy a bond from Arizona or Nevada, they have different tax structures. and there's a tax for profits from the state and the government and the federal government, and sometimes even within the local community that you live in. So again, it needs a little bit of direction to make sure what's best.
For instance, a bond could be voted in by the Beverly Hills School District to support that, and you would have to pay the income you make from it in taxes, because Beverly Hills would tax you because they have a separate tax program than the state and the federal government.
Okay, it's a municipal bond within Beverly Hills, and it is a municipal, and you've loaned your money to them. That usually comes out that it's not taxable. If you were to buy a corporate bond and you had gains on that corporate bond, the gains on the bond would be taxable. But I'm actually not an accountant, so this is just a generalized idea, so that you can picture it. So there's bonds that can be taxed, and there's bonds that can be tax deferred.
Yes, and that's why we want you to ask your own accountant or expert in the field rather than us getting into it, because every city, every state, and the US government has many, many rules and regulations for taxes, which, let us remind you, tax day is the 15th tomorrow. Get those taxes.
It actually doesn't have to be filed until the 17th because tomorrow's a holiday. So the IRS extended the tax payment to Monday.
Oh, so they recognize Good Friday as a holiday?
Mm-hmm.
Well, I didn't
Many
realize
of the banks and the stock markets and all of that.
Well, I knew that. I didn't know that our government was that nice to us, so that's good. Okay. You don't want to get a fine.
By the way, if you haven't done your taxes, again, I'm not an accountant, but if you haven't done your taxes, please file an extension with whoever you use for your taxes so that you can work on them beyond the 17th.
Yes, absolutely. Absolutely. Okay, so where are we here? I'm getting confused myself. Oh, REITs, real estate investment. Can you speak to that? Just explain what it is, or if that's not in your purview, we can skip over that and they can go to their accountant.
REITs can be bought. They are real estate, but they can be real estate in a commercial area. It can be real estate in a local community. There are some REITs that even go into specialties like medical facilities or warehouses. So they provide, again, you're loaning the money to the REIT and you get interest back for that. And one product that I didn't mention, Judith, when we were talking about mutual funds and stocks, is there is also what's called ETFs. So an ETF is bought and sold on a daily basis in the stock market, but it's bundled like a mutual fund. And a mutual fund doesn't get its dollar value until after the market is closed at 4 o'clock. So with ETFs and stocks, when you place the order to make a sale, it's sold within that day, within the time that the order is placed, with no delay.
Interesting. Yes, good. Okay, that's good to know for people. What about spiders? Everybody hears about spiders on the television commercials and things like that. I don't think they're quite as popular as they were a couple of years ago. I haven't heard anybody talking about spiders except the creepy crawly ones.
Yes, and I don't like spiders. I run away from them. I make sure my husband gets that taken care of. So a spider is actually one of those ETFs that I'm talking about, and it bundles together certain stocks. Spiders, I haven't looked at recently, but I believe they're in technology. So you can get a specific spider that invests in a certain category. Invesco is a company that does really well with these ETFs in the spider, and they're focused on a particular product usually. So I am licensed with about 1,300 different companies to place trades. And Invesco is a good company. BlackRock is a good company. Those are companies where you might find something that would be of value. And then there's, like I said, there's 1,300 different kinds of companies out there. And when you're working with your advisor, you may want to figure out what they have to offer for you in that category.
Sure. I mean, there's
So
all
a sip of water, my mouth is getting dry.
go right ahead. There's all sorts of different ways to invest your money and different specialties. And I used to be involved in the natural gas business. I guess I should divulge that. So, that was an investment thing also, where you're sort of loaning them and hoping that the holes wouldn't be dry, which is a very lucrative business to be in places like Pennsylvania, except now that we're talking about green energy and things like that. So that's another thing you can take your special interest and invest in that, if that's what turns you on financially. So I think
they're somewhat interested. I mean, there's people that are still sticking with the spiders because they are an ETF and it's an easier way to make the trades. You just mentioned something. I don't know if this is on your questions there, about green energy.
Yes. It wasn't, but let's go to it. Yes, let's talk about it.
I am also, as I said, I take about a new degree every so many years, and I haven't done one for a while. So my current study is in the green energy, the companies that are doing better. I don't have my notes in front of me, but last week I was in a program, and there is a company that investigates all these big companies like Coca-Cola and Pepsi and various companies that say that they are energy conscious and that they're conservation conscious. Well, they go in and review them and then give a report that is publicized about green products. It is going to be one of the most important things that we can do for our global safety. It's just climate change is so serious, and by being more cautious, and with Coca-Cola, the thing that I learned last week is they aren't fully conscious with their operations, but they have a target for 2025 to have their bottling recycling issue even further expanded, and then their disposal and reuse of that product. So they are actually starting to meet the requests of being a green company. And I have a list of about 100 different companies that are in that area. I work with also a mutual fund company that focuses basically on climate change and energy concerns.
I think what we need to do with this climate change and going green is take our time so that we don't make huge mistakes in the United States and spend all of our money that's going to actually cost other people money in the United States, putting people out of jobs. We need to be creating the jobs in that industry as we move from fossil fuel to the other. I will tell everybody I am in favor of fossil fuels done the correct way. So I'm in favor of both. And it's like people getting along. Let's merge them together while we change the way we live and exist, so we save our planet. But let's not kill us off in the meantime by not having enough food or energy. At any rate, let's move on. Now, where are we? We spoke about inflation and all. So what would you tell kids that are graduating from high school, and whether they've decided to go to college or not go to college and maybe get an alternative job in the electrician, plumbing, working on automobiles and things like that?
Trades.
Trades, yes. What would you tell them about protecting their money as they're growing up? Are there classes at that, or would they employ you? Would you charge a fee to instruct them? How do you do that? How do we get these kids to know?
First of all, I recommend that young people just getting out of high school try to start making a habit, because when you create a habit, it's very important. And one of the habits that I started with my kids and my grandkids is to put away about 5% of whatever you earn. So you can spend $95 out of $100, but that other $5 needs to be set aside. If they do just a 5% savings between now and the time they're ready to retire, they'll probably have over $1 million in savings, as long as
See,
they leave it alone and let it continue to grow.
this is what needs to be told to kids, because they could have a lot of fun on that $95, but they're still looking out for their future in time. I am a big advocate for high schools teaching finance, whether it's personal or entrepreneurial, in high school, and have it taught to them not as an elective and not in grades 9, 10, or 11, but specifically for seniors before they graduate. No matter what they choose, college or the trades, whatever they're going to do, they need to know how, well, I still say checkbook, but everything's on the laptop or computer or your phone these days.
Your
But you need
handheld. I do most of my banking on my phone.
and I can't look on the phone. It's too small for me to see on my phone for my finances. But I use my laptop for just about everything financial. And these kids, some of them are like the old joke about, well, I shows I have money in the bank or I have checks in the checkbook, so I thought I could just keep spending. I mean,
Yeah.
you know, they
And
don't
that's
learn
truly a
anything.
problem. Yes.
It is a big problem.
The kids will say, oh, I've got this checkbook. I actually, when I got out of high school, I had that exact same impression. As long as there were checks in my checkbook, I could keep writing.
Right.
Didn't matter that I'd only put $500 in the checkbook.
Right.
I basically have lived through most of the problems that people face in my lifetime and in my career before I got to doing what I'm doing now, which was I went that in steps as well. I was an insurance agent first, and then I started maxing my insurance products along with mutual funds. But when I went through a divorce, I did not do well with that. And we actually did a mutual agreement type of thing through a financial counselor. And what they told me I could do was to withdraw money from a retirement plan that was my husband's, because you have a marital right to 50% of those assets also.
Correct.
I was not doing this kind of work back then. So I took the money and paid off some credit cards, felt really good about taking care of all of that, bought some furniture from my condo. And I then took my stuff to the accountant, which was the same accountant that I used with my husband when I was married. And it turned out, because I'd liquidated that retirement plan, I owed taxes and late penalties for not declaring it when I took the money out. So I had like 3 days to get this taken care of. And I went to a different accountant and told her, I need to get some things taken care of. Let's file an extension. I got everything paid over the next month because I'm creative. But I have been, asked about penalties. I have been through challenges with the IRS. I've been through a divorce. I've raised 2 daughters pretty much on my own, and continued. One of the reasons why I went into my industry is because I can work hard when I have the time to do it. But when I was raising my daughters, I was able to be with them for their ballet lessons and their after school things and their homework. And then I could actually work with my clients during those times when I wasn't taking care of my daughters. So I worked pretty much 6 or 7 days a week to make my budget, but it was a learning process. And at some point in time, my ex-husband then sold a piece of property that we were both owners on and didn't tell me that he had sold it, and there was capital gains on that. So then I had to go in and have negotiations with the IRS face to face. So if you're looking to make things work best, if you're going through a challenge in your time right now, a spouse unfortunately has passed away due to the pandemic. You have an inheritance coming in from someone. You want to make sure that all these things are set up correctly in your financial picture so that you don't have to sit and be so distressed and frightened of the IRS. On my part, I was literally shaking when I went there. And how I decided to get into this business is because I wanted to inform myself more. So I went for that next degree to do that.
I can understand, because when I sold my business that I owned 50-50 with an ex-husband, the taxes got so mixed up because of his accountant that it ended up costing me most of the money because I had moved out of state and it was filed incorrectly and all of this. And you don't want to mess with the state of California. The feds were okay. They were a breeze, but the state of California wants your blood, not just your money. So I have been through just about every single thing you just said. And I found that owning your own business and making it profitable is the best thing for a woman to do. It teaches you a lot, but it gives you the time, if you have children, to be with your children. And that is all important in my mind.
I have two of the best daughters. They're full grown adults now and pay taxes themselves. And I have 5 grandchildren that are from those 2 daughters. And I have 4 step grandchildren from my first marriage. So I stay close with all of them. But that time that I could spend with them, they had the kids had a mommy and me day. We would take off in a convertible that I had at the time, and we would just go and play. My grandkids, I did grandma and me and spent time with them. And we started out with teaching them at my desk right here on financial things. And then we'd go and do whatever it is they wanted to, Buster and Dave's or lunch or a movie. So those times, making sure that you also budget your time for your relaxation, it will make things easier for the rest of the things that you need to do.
Absolutely. Absolutely. And I think that's very important. But to get back to finance here.
Yeah, I'm sorry, I got off that a little bit.
No, I love it. I love it. I'm not sure, is there something else?
I'll give one more example also about this idea, but it's in the investment and financial things. I have a story that I wanted to share, and I think it's right about in this time in the questions. 5,000 years ago, the Egyptians started building pyramids. They built blocks with sand to make a structure that lasted decades and centuries to protect their pharaohs. And what I look at with investments is it's kind of like a pyramid there. You can see that. And at the bottom with the pyramids, you put your basic safety things like bonds. When you step up to the next level in the pyramid, you put the things that are possibly going to be safe, but they got more income producing opportunities too. So it's a little bit more risky. Then a 4th section up at the top is growth. And the very top, the point of the pyramid, is aggressive and risk problems. But you only do, my maximum with clients that are fitted for that is to do the risk things there, but not more than 5%. So these great pyramids that were built did last hundreds and thousands of years. And what we want to do is build your portfolio that same way. And then what I want you to visualize, even though I've done this, is to take that pyramid and reverse. Anyway, the biggest part is on the top. The smallest part is at the bottom. And what you do with a financial planner is start to decide where you're going to pull these investments out to pour into your budget when you're at 65 or 70. And that's how you build a diversified portfolio. And I have clients that started with me in 2008 when they were really frightened by the market. They had a retirement plan roll over from a major corporation. And between the 2 of them, they both had qualified. They had over $1 million. So we invested in 2008. And from there, the portfolio just continued to grow because we were in a challenge time. But that was the best time. You want to, like when you go to Nordstrom's, you want to buy low and have a great product that was really valued at a higher value. They still, after 12 years and taking $40,000 a year out of their account, it's $480,000 they've removed from that account for lifetime every year. I'm sorry, I said 40. I mean $480,000. And they have over $1 million still in their portfolio.
That's wonderful.
So, because their products were invested and we took advantage and I changed things around in their portfolio, they were maintaining a retirement lifestyle.
Well, now this is what you need to remember when you're investing is what are you going to do in retirement? And I think we've gone over a lot of different instruments you can use, but I think key to the whole discussion we've had today is to find a good person that you can trust in your financial planning or whatever. And I would suggest you interview the people. So, Marty, before we say goodbye to you and then I say goodbye to my audience, can you just, you're so generous and you want to give a little gift to everybody who was involved in our little class today.
Okay, so if you are able to go on the computer and go to my website, Laff Financial, when you get in there at the top tab, there's a place that says risk reward analysis. It may just say risk. And if you click on that tab, again, it will enter into this report concept. I mentioned it at the beginning of the program. You can get a free report, and if you want to, you can ask me to give you, and it's no charge, by the way. It's about 5 minutes. And also there's other tabs in there if you want to investigate. There's a tab for lots of things, but just try one and see if it works for you. And I hope to see and hear from you. Judith, I really appreciate this opportunity. It's been delightful to talk with you. I appreciate the audience that you have, and I want to wish you the best going forward.
Thank you so much, Marty, for being my guest today. And I hope you'll come back another time, maybe when we have a few months into this inflation or if the recession comes, because you have such valuable advice. Thank you. And I will see you soon, Marty.
All right. Goodbye.
Bye. All right, everybody. That is it for today on Judith Mancini Today. I'm going to have a surprise guest for you next week, and I'm not going to even share with you what it's going to be about, but it's going to be fun. But I do have some news. My website is still being worked on, but it is now up and running. So you can go see some of the previous shows I've done, not only for Judith Mancini Today, because as you know, we've just relaunched this, but you can go back and see some of the old, or listen to some of the old Dishing with Judith shows that we did that also touch on some interesting things. So I am going to say goodbye for today, and I look forward to seeing you next week. And I thank you so much for joining us on Judith Mancini Today. Remember, cherish yesterday, dream tomorrow, and live today. Bye-bye, everyone.